Okay, hello class. Good day. And to continue our discussion, our previous discussion, we're now on the different property relations between husband and wife. So the property relations between the spouses shall be governed by contract or prenuptial agreement executed before the marriage, which may be first, we follow the absolute community of property. Second is the conjugal partnership of gains, and the third is complete separation of property, and four, any other property relationship now, which it's stated no in the contract or the prenuptial agreement. So you have here the particulars, and you have here the conjugal partnership of gains and the absolute community. So you have here the items now. For the property acquired before marriage, if it is in gratuitous title, if it is donated. So for the conjugal partnership of gains, it is exclusive, no? To the, either to the husband and wife, kung sino na ang gintagaan. It is exclusive. Iya lang gid na iya sang wife or husband nga gintagaan. For the absolute community, it is conjugal, no? Kung gin-donate ina sa asawa or sa bana before siya ginkasal, so when we follow the absolute community, it becomes conjugal. So ila na nga duwa. Kung conjugal partnership of gains, iya lang na ni asawa or ni bana nga gin-donatean before siya ginkasal. Okay? Kung onerous title, which means ginbakal ni bana or ni asawa before marriage, under the conjugal partnership of gains, it is exclusive to the bana or asawa nga nagbakal. But under the absolute community, it becomes conjugal. Iya, kung ano imo, amo man na akon, daw na sa. So, of the spouse who has a legitimate descendant from a previous marriage, so ginkasal siya before and napatay ang partner, ang property, before siya ginkasal sa present, it's exclusive under conjugal partnership of gains and it's exclusive under absolute community. Okay? Excuse me, class. So, property acquired during marriage naman yan. Nakasal na si asawa kag si bana. If it is gratuitous, kung gindonate either kay asawa or kay bana, under conjugal partnership of gains, it is exclusive. Under absolute community, it is exclusive. Okay? So, there is a difference. If onerous title, it is both conjugal. Ginbakal ni asawa, ginbakal ni bana, and they are married already, it becomes conjugal. If it in exchange for exclusive property, it is exclusive under conjugal, under conjugal partnership of gains, and it is conjugal now under absolute community. So in exchange for conjugal community property, it is conjugal for both conjugal partnership of gains and absolute community. Income from exclusive property. So may exclusive property si asawa or si bana, income dira. Under conjugal partnership of gains, it is conjugal. Under absolute community, it is exclusive lang kay bana or kay asawa. Okay? Income from exclusive property. At income naman from conjugal property, of course, since the property is conjugal, therefore, ang gains niya or income dira is also conjugal. So, I think I have example. Let's go to your module. It's on page 5. We have an example. Mr. Jose, Filipino, married, died, leaving the following estate. So, car acquired before marriage by Mr. Jose. It's 300,000. Car acquired before marriage by Mrs. Jose. it's 450,000. House and lot acquired during marriage, it's 1.5. Jewelries of Mrs. Jose acquired before marriage, it's 100. Personal properties inherited by Mr. Jose during marriage, it's 250. And benefits from SSS, 50,000. Retirement benefits from a private firm, it's 150. Proceeds of group insurance taken by his employer, it's 75. Land inherited by the wife during marriage is 1 million. Income earned from the land inherited by wife above 25% of which was earned after death. So the gross estate under conjugal partnership of gains is, okay. Sometimes have, hindi siya okay. Don't bother. I have to check my screen again kasi hindi amo ang nagagawa. Okay, ano siya. Okay. Let's take this one by one. So, kaanta si conjugal partnership of gains and the absolute community. First is the car acquired before marriage by Mr. Jose. Si Mr. Jose ang napatay. So, kaanta ang iyang ma-include sa iyang estate. Car acquired, that means he acquired it before marriage. It's onerous title. So, are na lang mo Diko-dikota class mako-dikota. Para dungan ta answer. You have to split. And I have to pull up sperm kita. Oh. Ay, diretso ako. Okay. Okay. So, car acquired before marriage by Mr. Jose, onerous title before marriage. Here, under conjugal property partnership of gains, it is exclusive. Under absolute community, it's conjugal. Therefore, 300,000, it's exclusive. Under conjugal, gratuitous. Wala siya, no? Onerous, yes, 300,000. Under obsolete, absolute community, it's conjugal, okay? So 300,000. Next is, dito ma-highlightan. Okay. Car acquired before marriage by Mrs. Jose. So under conjugal partnership of gains, wala. Ari siya class ang 300. Kay under conjugal partnership exclusive iya, pero siya ang napatay, di ba? So ara sa. Under absolute community, it's conjugal. So ara gid man sa. Okay? So next item is medyo katalalang class, no? Muna sa ang mga property relations, medyo ni siya ka-tricky. Car acquired before marriage by Mrs. Jose. So since si Mrs. Jose is buhi, so wala, hindi siya, no? Wala siya na-include, but ari di siya. It's conjugal. Next is house and lot acquired during marriage. House and lot acquired there. It's conjugal, no? During marriage, onerous title, ginbakal nila. Sama na sa class. So highlight naman para makita tamang items nga ara na nasulat na. Highlight ni ND460. Okay, so we're done with that. Next is we're done with this. So jewelries of Mrs. Jose acquired before marriage, it is conjugal. No, under absolute community, and is exclusive under conjugal partnership of gains. And there is also a statement for this, and I think wala required properties using all properties. No, contracted. Okay. It's only A and B. Kung ano man, nabasa ang jewelries, muna siya. But then it's yes, it's conjugal. It's conjugal under the absolute community. Next item is no onerous title. Personal property is inherited by Mr. Jose during marriage. So it's during and it's gratuitous. Gratuitous during exclusive. So wala, hindi naton pag yes, exclusive. Ari siya, 250. No, kay si Mr. Jose ang na-deads. Okay? So, ano to, hambalya? Personal properties during marriage, it's exclusive for both conjugal partnership of gains in absolute community, and it is included. Next is benefits from SSS. It's hindi na pag-include. Excuse me, class. Retirement benefits from a private firm. I think it's not included. Then proceeds of group insurance, it is not included. Land inherited by wife during marriage, during and gratuitous, it's exclusive. It will not be included here since si Mr. ang na-deads. Iyan ni Mrs. Then income earned from the land inherited by wife, 25 of which was earned by that. So only 75% of this. So this is gratuitous. It's exclusive, but then ang iya nga income under conjugal is yes, it's under conjugal partnership of gains, it's conjugal, but it's exclusive under absolute community. So ari siya. Okay, so follow lang class okay, ara na. So I'll remove the split. So na-consider to na. So ang estate ni Mr. Jose under conjugal partnership of gains is 2.2 million and under absolute community is 2.6 million. That's it. Sa class ang katalalang sa mga amo-amo sini. But then practice lang, no? Continue practice, no, para masige lang ang aton analysis. Ari man gali. Nagpakabudlay pa ta. Okay, sige. Next is formula to compute the net estate naman niya. Gross estate to siya class. Ang are, gross estate. Then let's go to the net estate. Now by married descendant. You have here the gross estate. He has the total exclusive properties plus the total common or conjugal properties. That would be A plus B. This is your total gross estate plus your ordinary deductions. Ordinary deductions consist of your claims against the estate, claims against the insolvent person, mortgages, taxes, and losses. Then transfer for public use, vanishing deductions. The net estate before special deductions, amo ni siya, your total exclusive properties less your these items, your common or conjugal properties less these items, but not the transfer for public purpose and vanishing deductions here for the common and conjugal. And you have here the net estate before special deductions. So, muna din yung mga net estate before special deductions. Less your special deductions of family home, standard deduction, your RA 497, and share of the surviving spouse. You have there the net estate. So, the gross estate of a married descendant is composed of his total exclusive and conjugal properties. So there are two major allowable deductions. We have the ordinary, ito kagina ang elite, no, expenses, losses, interest, and taxes. Ano siya ang elite. Then the transfer for public purpose in the vanishing deduction, that's your ordinary expenses. And your special deductions is your family home, RA 4917, your standard deduction, and the what else? I have missed one. Yes, share of the surviving spouse. So that's your special deductions. Your ordinary deductions, yes, they are divided into three parts. The elite, no, consists of claims against the estate, insolvent persons, mortgages, taxes, and losses. And second is the transfer for public purpose. And third is the vanishing deduction. So na siya ang special deductions na as I have mentioned earlier. So claims against the estate, claims against insolvent persons, mortgages, taxes, and losses are either deducted from the exclusive or the conjugal property depending on the property attached or benefited. So depende kung diin na siya nag-upod si elite, no? Whether nag-upod na siya sa imo exclusive property sang na-deads or sa conjugal property sang mag-asawa. So dira na siya maupod. And vanishing deductions and transfer for public purpose are deducted from the exclusive property. That's why wala na siya sa conjugal. Then special deductions like the family home, standard deductions are amounts received from RA 4917. No, medical expenses, it's not. And the share of the surviving spouse are deducted from the total estate. Class, please crush out the medical expenses. We don't deduct medical expenses under train law na. So wala ko na siya gali na natiparahan. So I have to apologize for that. Okay. You have there the exempt transmissions. So I have to find a video nga naga-explain si Nikay kado kabudlay siya i-drawing bala klasaw. Ito kabudlay man siya i-explain. But then we have here the exempt transmissions. Yes, we're here. The merger or usufruct in the owner of the naked title, fidecommissary substitution, the transmission from the first heir, legatee, or down in favor of another beneficiary in accordance with the will or the predecessor, and all bequests, devices, legacies, and or transfers to social welfare, cultural and charitable institutions, no part of the net income of which inures to the benefit of the individual, provided that no more than 30% of the said bequests, devices, legacies, or transfers shall be used by such institutions for administration purposes. And you have there, and I have to go back again. Okay, so allowable deductions, you have here your elite, no? Your elite, claims against the estate, yes, we can have it as our deduction. And for the non-resident alien, yes. No, claims against insolvent person, unpaid tax, mortgages, taxes, and losses can be claimed by citizens or residents and non-resident alien, but subject to limit. So amo ni siya ang formula. I will discuss this later on, no? Then for transfer, yes, for transfer for public purpose, they can have it as deduction, vanishing deduction, they can have it. For family home, yes, for citizens and residents, but if you are a non-resident alien descendant, it is not. We cannot, we cannot claim a family home. Why? The property is outside the Philippines. No, non-resident alien. He is not a resident of the Philippines. So therefore, ang family home niya is para sagwa. Makita ta na karon ang requisite sa family home. Standard deduction, we have for citizen and residents, yes, yeah, we can have it, and its amount is 5 million. For the non-resident alien, yes, but only up to 500,000. Manang ilang limit. Then amounts received by heirs under RA 4917, retirement benefits, yes, can be our allowable deduction, but no when it comes to non-resident alien descendant. Then the conjugal share of the surviving spouse, now for married descendant only, we can have it as our deduction. So funeral expenses, judicial expenses, and medical expenses are no longer allowed as deductions under train law. So let's discuss one by one. Requisites of claims against the estate. We can have it as our allowable deduction if it is notarized. There is a notarized debt instrument. If it is contracted within 3 years, before that, there shall be statement showing the disposition of the proceeds of loan. Paano siya gingasto, no? If it is contracted within 3 years from the date of death, then the liability represents a personal obligation of the deceased existing at the time of his death, except unpaid obligations incurred incident to his death. So, ang mga utang niya bala, ang mga claims sa iya, ang mga utang niya as of na napatay siya. So, amo na siya class ng pwede ta na iya consider as claims against the estate. Bali, mabuhin ta na, kaya ipambayad na sa magiging pangutangan niya mo. So, muna siya, no? It's a personal obligation of the deceased existing na at the time of his death, except those unpaid incurred incident to his death. So, before death, during and after, it cannot be claimed, no, as a deduction. Then the liability was contracted in good faith and for adequate and full consideration in money or money's worth. And the claim must be a debt or claim which is valid in law and enforceable in court. And the indebtedness must not have been condoned, no, by the creditor. Bali wala gin condone, no, wala gin dula ni creditor. So it is existing at the time of his death. Or the action to collect from the decedent must not have prescribed. So there is a law sa aton nga mo sina no na nag-prescribe na iutang something at I think it's 10 years no kung wala na bayaran nag-prescribe na do wala na sama na sa class so ang utang na must be wala nag-prescribe no. So next is the claims against insolvent persons. The amount thereof has been initially included as part of his estate. So gin-include siya sa babaw no as his gross estate. Then ibuhin ta sa no as claims against insolvent no as our allowable deduction. The incapacity of the debtors to pay their obligation is proven. Kaya hindi ka na ito masukot. And the incapacity of the debtor nga hindi nasakabayad must be proven. Then the only the portion uncollectible is deductible. The whole amount for the receivable must be included in the gross estate and only the amount that is uncollectible will be included in your allowable deduction. So unpaid mortgages. Unpaid mortgages, in case unpaid mortgage payable is being claimed by the estate, verification must be made as to who the beneficiary of the loan proceeds. So we must know who is the beneficiary of the loan proceeds. Then, if the loan is found to be merely an accommodation loan where the loan proceeds went to another person, the value of the unpaid loan must be included as a receivable of the estate. So, please, if you have loan, please search what is the accommodation loan. No, I cannot present it here. The accommodation loan is though ikaw ang nag-loan in behalf of the other person. No, though ikaw ya ang nag-utang para sa iya. Sama na sa class. Then if there is a legal impediment to recognize the same as receivable of the estate, said unpaid obligation or mortgage payable shall not be allowed as a deduction from the gross estate. The next is deductible taxes. Taxes which have accrued as of death of the decedent which were unpaid as of the time of death. So na-accrue siya and were unpaid at the time of death. So the following items are not deductible. So income tax on income received after death, no? So hindi gid man. It's already after death na nga income. So income tax dira, so hindi ta siya ma-claim as deductible as deduction. Property taxes not accrued before death. There is property taxes before death but then wala na accrue. So hindi ta na iya ma-claim as deduction. Then the estate tax. Estate tax is the current obligation na iya sang estate na, not of the decedent itself. Okay, so hindi na siya deductible. Then requisites of losses arising from fire, storm, shipwreck, or other casualty, robbery, theft, or embezzlement, not compensated by insurance or otherwise. Okay, you can claim it as a loss kung wala siya na-insure. Then not claim as deduction in an income tax return of the taxable estate, then occurring during the settlement of the estate, then occurring before the last day of the payment of the estate, then the last day to pay is 1 year after the decedent's death. Then requisites for transfer for public purpose. We're done with delete. Ara na ta sa second part. Sa ang aton ordinary deduction. So transfer for public purpose, the disposition is in the last will and testament. So naka-state sa last will and testament. Ang ining property is nahatag ko sa for public purpose. Ginhatag ko sa, for example, sa DPWH na. Then to take effect after death. Again, state sa will and testament, no, and of course it will be stated kung na ma-effect siya, yeah, when the person who made the last will and testament dies. Then, in favor of the government of the Philippines or any political subdivision thereof, no, since it's transfer for public purpose, that means public, the government of the Philippines or any political subdivision. Then for exclusive public purposes, it's for the public purpose. Gindonate, ginbilin niya na, no, sa isa ka, example, sa isa ka government agency for the use of the public, no, for public purposes. Okay, so that's for transfer for public purpose. Now we're in the vanishing deduction. It is a property previously taxed. No, the deduction allowed from the gross estate for properties previously been taxed. So it is called vanishing deduction because the deduction allowed diminishes over a period of 5 years. So nagadula siya. So the rate of deduction depends on the period from the date of transfer to the death of the decedent, from the date of first death, from the date of first death ng pag-transfer up to the death of the decedent and gin-transferan to some first death bala. So this is the percentage of deduction if ang gap sang duwa ka kamatayon is 1 year or less, so you can claim it 100%. If greater than 1 year to 2 years, 80%, 2 years to 3 years, 60%, 3 years to 4 years, 40%, 4 years to 5 years, 20%. So it diminishes over a period of 5 years. Requisites of vanishing deduction. 1. The present decedent died within 5 years from the transfer of the property from a prior decedent or donor. So ito kagina 5 years. Excuse me, plus. So the property must be in the Philippines. Take note of that. The property nga gin-transfer must be in the Philippines. Then, sir, the property formed part of the taxable estate of the prior descendant or of the taxable gift of the donor. So here, we're talking about estate tax. So it's it must, that property gin hatag, no, sa descendant nga napatay subong, it must be included in the taxable estate of the prior descendant. Then fourth is the estate tax or donor's tax on the gift must have been finally determined and paid. No, the property must be identified as the one received from the prior descendant or something acquired in exchange therefore, and no vanishing deduction on the property was allowable to the estate of the prior descendant. So this means vanishing deductions only allowed or can be only claimed if there is two deaths only, duwa lang kakamatayon plus tatlo na, no, then there will be no vanishing deduction on the third death from prior descendant only up to the present descendant. Amo na siya class ng vanishing deduction. So how to compute vanishing deductions? Number 1 is to determine the initial value. So the value of the property in the hands of the prior descendant versus the value in the hands of the present descendant, whichever is lower. So amo na saya class BIR, whichever is lower ginaya. No, kung amo sina. Yes, I have to share. So let's go to your module. Then let's go to your vanishing deductions. Okay. So diretso ta sa example. Okay, diretso ta sa example. You have here the mind exercise. Then it's very short. Paano ta makuha bala ato ang percentage, no? Katota di danay. Here, follow here. Then Rodolfo, a citizen and resident of Cabancalan City, died the state on May 10, 2020. Among his gross estate are properties inherited from his deceased father who died April 4, 2017. So 2020, 2017, so loads sa 5 years, there is vanishing deduction. Kaya wala man na-mention nga yung previous pagid nga death. So wala. So what percentage of deduction will be used in computing the amount of vanishing deduction? The answer is 40%. You have here, you simply subtract the dates, no? You have the present date, it's May 10, 2020, minus the previous date, April 4, 2017, equals, when it comes to month, so there is 1 month difference, 4 days, 6 days, and for the year, we have here 2020, 2017, it's 3 years. So it's sulod siya sa 3 to 4. So if 4 to 5 is 20, 3 to 4 is 40%. Okay? Kung pwede nyo man class, una, danay si year, no? Una si year, para dasi. Ang date kag ang month. Ayun yung kanat, pwede nga, hindi na lang. Ang year na lang. But, check, no, sa days. No, to check base bala, for example, diri 2, diri 28. So paano na, no? Paano mo na siya i-ano? So simply imagine the days, no, sa kalendaryo. Dira mo na siya i-ano naman, ibuhin, no? Hindi ka diya so kung diri days, diri bit 2 days, diri 28. Baraw ka di 1 butang tanaw. Sige, testingan ta May 2, 2020, yes, sakto. Then, April 28. Butang ta, May 2, 2020, napatay. Then, April 28, napatay ito yung una. Paano na siya? So, May 2. So, nabuhay na ang 3. So, 2 less 28, hindi pwede. Baraw ka di kay May. So May, it's already at kadi 31 days, so 33 days nisa. So pwede mo na buhin. So it's 5 days. Dire kay wala na, 4 na lang di siya. Kanyang buhinan mo siya 30 days mo. So 4 months na lang. Ang 5 buhinan mo 31 days. So 4 months na lang. So it's 0. Sulod sa Japan sa 40%. Okay? Tama na sa class. Okay. Then how to compute? So 3 years, 6 months, and 1 day. Okay. So how to compute vanishing deduction? Okay. So determine the initial value, the value of the property in the hands of the prior descendant versus the value in the hands of the present descendant, whichever is lower. So we have here, let's do it together. Mr. Abra died on November 1, 2020. On July 1, 2018, Mr. Abra inherited the following properties from his mother who died on the same year. So, identify ko no ang values ng property. So whichever is lower, ang values ng first death versus ang values ng recent nga death. So house and lot, which is lower, 500. It bold. Appliances, which is lower, 100. Then here, 70. So the total is 500 plus 100 plus 70 is 670. So that's the our first step. Now step 1. Okay? So next step 1 ta wala taging basa tanan. So you have also the details, no? Mortgage on the above properties 150,000, mortgage paid by Mr. Abra 100,000. Unpaid mortgage as of November 1 is 50,000. So the rate of vanishing deduction is 60%. Assume that the sum of expenses, losses, indebtedness, including above unpaid mortgage. Take note of this. Unpaid taxes and property transferred for public purpose amounting to 170, and there is no other properties left by the parent descendant other than the inherited properties. So, muna to siya. So, na-identify ta na no, total initial value. So, it's 650. Then, step 2, the new initial value. Determine the new initial value. Reduce the initial value with any mortgage payment made by the present descendant. So, ano ni siya? Mortgage on the above properties. Mortgage paid. Ari siya. No? So, 100,000. So, our new initial value is 570. Kaginbuhinan ta na sa sang mortgage paid ta. Then, step 3, may new initial value na ta class. Determine the basis for vanishing deduction. Excuse me. So, the new initial value will be reduced by the equation provided by the law as the following. So, how to get the basis? First, we have to determine reduction ta sa aton nga new initial value. So ang reduction ta is this formula. The initial value divided by the gross estate times the elite and TPP. Bali, do ang proportionate nga deduction bala sang new initial value over the gross estate. So our new initial value is 570,000 and our gross estate is this, the value sang bag-o sang recent nga debt, no? So it's 70 plus 100 plus 70. So it's 870 here, no? 870. So 570 over 870 nga gross estate times 170,000 nga gin-state kagina ni, no? The elite plus the TPP 170. So this is our deduction 111,379. So our new initial value is our amo to kagina ang new initial value nga 570 less this deduction, no, 111,379. So our new initial value now is 458,621. So compute, ang step 4 is compute the vanishing deduction. This times the rate nga 60%. Ang 60% ni amo ni siya ang ang difference to sang pizza sang unang pagkamatayon and the recent nga death. So amo na sa class ang vanishing deduction. To review the step first, determine the initial value, compare the values of the property of the prior death and the recent death, whichever is lower. Then you total. Second is determine the new initial value by deducting any mortgage paid, no, in relation to the property. So that would be your new initial value. Third step is determine again the super new, the new initial value by deducting by a deduction using this formula. The new initial value divided by the gross estate times the elite plus the transfer for public purpose. Do bali do ginbuhinan mo pagid siya, no? Kadi ginbuhinan mo siya sang mortgage paid, buhinan mo pagid sang share sang sina nga property gin-inherit ya in relation to the elite kag transfer for public purpose, no? And you have already the new initial value, and that initial value will be multiplied to the percentage, no, that you have computed related to the difference to sang first death kag second death, and that's the amount for your vanishing deduction. So that's vanishing deduction. Let's go to the what's it called this? Let's go to PowerPoint. Okay, we're done. So let's go now to the requisites of family home. So the family home must be the actual residential home. Amo gini siya ang ginapulian sang napatay. So it must be within the Philippines of the decedent and his family at that time of his death as certified by the barangay captain of the locality where the family home is situated. It must be certified by the barangay captain. And the total value of the family home must be included as part of the gross estate of the decedent. You can claim it as an allowable deduction for as long as you have included it in your gross estate. And allowable deductions must be in the amount equivalent to, no, pila ang ibuhin ta sa as family home. The current fair market value of the family home as declared or included in the gross estate until the extent of the decedent's interest, whether conjugal or community exclusive property, whichever is lower but not exceeding 10 million. So that means, example, the fair market value of the family home is 8 million. So you include that in your gross estate. So pila ang imo ibuhin as i-claim as family home. So pila imo ibuhin sa dalong 10 million. Kiti 10 million man ang gina-state ko mo. No, it's not. It's still 8 million. No, to the extent lang sang amount nga na-include dito sa babaw. If ang family home sang napatay is 15 million, so 15 million will be included in your gross estate. But pila ang ibuhin ta sa family home? It's only 10 million since this is the ceiling. na pwede ta ma-claim as deduction, no, for family home. So it's 10 million. 15 million na include sa babaw, but you can only claim 10 million allowable deduction for your family home sa class. Then standard deduction, if you are a resident or citizen descendant, you have a standard deduction of 5 million. No, there is no substantiation, wala na kinanglan ang supporting. Then for the non-resident alien, it's only to the extent of 500,000. So amount received by heirs under Republic Act number 4917. So any amount received by the heirs from the descendant's employer as a consequence of the death of the descendant employee in accordance with RA 4917 is allowed as a deduction provided that the amount of the separation benefit is included as part of the gross estate of the descendant. So always take note, class. You can always claim allowable deduction. Now, those items that I have mentioned earlier, you can only claim that as allowable deduction for as long as it is included, no, in the gross estate, except for the expenses, losses, interest, and taxes, and the transfer for public purpose na include to siya sa babaw, then you can have it deducted sa dalawa. So net share of the surviving spouse in the conjugal partnership or community property. So after deducting the allowable deductions, only the ordinary deductions classes, stop sa ordinary deductions, no? Gross estate, less ordinary deductions pertaining to the conjugal or community properties included in the gross estate. The share of the surviving spouse must be removed to ensure that only the descendant's interest in the estate is taxed, no? So let's go to the module, to your module. So we're done with that, Okay. Okay, man siya. So you have here, so let's do it together, page 11. So Pasita Regalado, a citizen of the Philippines, single. Oh, she's single. Is siya married? Wala ta example nga married. Ate, sige single Died, a resident of the United States, leaving the following properties. Real property in U.S. inherited from the father 1.5 years ago. Personal property in the Philippines inherited from the father. Family home in the United States, and only the following expenses and obligations: actual funeral, other obligations contracted within the last 2 years. So the gross estate subject of the Philippine estate tax. So Pasita is a citizen. So it's all properties within and without. Total of this, so 2 million plus 1.6 plus 12.4, so the gross estate is 9 million. Okay, 8%. Deduction for family home. So do we have deduction for family home? No. Why? It's in the United States, so you cannot claim deduction for family home. So vanishing deduction, only the property that is within the Philippines. No? You cannot claim this kay ara siya sagwa. It's only vanishing deduction is allowed only for properties within the Philippines. So inherited from father within the Philippines, it's 1.6. The reduction is 1.6 divided by 9 million gross estate times the 350. It's 100 plus 250. Yes, it's included in your expenses. So 62,222 is the deduction. And this is the initial basis for vanishing deduction, 1.5 times the 80%. To find out why. Why 80%? 1.5 years. That's 1 year to 2 years. So 80%. So this is your vanishing deduction. Net taxable estate. Gross estate of 9 million, less vanishing deduction, less your expenses, less your standard deduction of 5 million, wala siya family home since your family home is located in the United States. So you have a net estate of 2.4 times 6%. 6% is the rate, no, for estate tax under train law. So your estate tax is 145,187. So that's it. Rules for estate tax credit. Estate tax credit if there is a prior payment na balakla sa mga taxes. So, okay, let's discuss. A tax credit is granted for estate taxes paid to a foreign country on the estate of citizens and resident aliens subject to the following limitation. So, tax credit is allowed only for, of course, citizen and resident. No, kay ang properties, di ba, nga included dira, ang ginataksan natin is outside and within. So if may ginbayad siya sa nga taxes outside the Philippines, so mo ni siya no tax credit nga ginakompute ta. So if there is one foreign country only, the tax credit is whichever is lower between the estate tax paid to the foreign country, the actual estate tax paid to the foreign country, or the tax credit limit. How to get the tax credit limit? The non-taxable estate divided by the non-taxable estate world, that's non-taxable estate within plus non-taxable estate without times the Philippine estate tax. So you have to compute the Philippine estate tax, danay, no? And letter B is more than one foreign country. So there is one more than if there is more than one foreign country, tax credit shall be whichever is lower about amount between limit A and limit B. So what are these limit A and limit B? Let's go to our example para maintindihan. So you have here, okay. Foreign country A, net estate of 100,000 and estate tax paid of 8,000. Foreign country B, net estate of 200,000 and estate tax paid of 9,000. For the Philippines, net estate is 1.2 million. The descendant was a resident and citizen of the Philippines. Estate tax credit for foreign taxes, estate taxes paid is. So first, we will get the Philippine tax estate. So that would be 1.2 million net estate within the Philippines times 6%. So it's 72,000. Yun yung estate tax sa iyang Philippine estate tax. Let's compute for limit A. Limitation A, we compute it for each country. No? For country A, it's 100,000. Estate net estate ya for country A, it's 100,000 over 1.5 million. Dini 1.5 million. Dingding pang 1.5 million. It's 100,000. Net estate country A, 200,000 country B plus 1.2 million Philippines. So it's 1.5 times the Philippine estate tax of 72,000. So it's 4,800. So we have to choose between 4,800 versus the 8,000 actual tax paid. Whichever is lower, 4,800. Country B. Country B net estate of 200 divided by the gross estate of 1.5 times the 72,000. Philippine net estate is 9,600. So compare that to the actual estate tax paid. No, ari siya. Of 9,000, whichever is lower, is the actual tax paid. No, sagwa, it's 9,000. Pila ang amount for limit A? It's 4,800 for country A, mas lubo, plus 9,000 for country B. So that totals to 13,800. That's for limit A. Limit B. Limit B is the total of foreign A and foreign B. The all taxable, all net estate without. Okay? So 100,000 plus 200,000, that's 300,000 divided by 1,500 times 72 is equal to 14,000 amount of limit. No? So you have to compare 13,800 versus 14,400 nga limit B. Choose the lower amount. Of course, ako gina si BIR, always choose the lower amount. So para pila na when it comes to tax credit. So pila is 13,800. So 13,800 ang nagdaog. So 13,800 at ang tax credit. So Philippine estate tax of 72 less the tax credit amount of 13,800. The estate tax still due is 58,200. So muna siya class. Ang buot silingon yan eh. No, if there is more than one foreign country. Okay. So settlement of the estate tax or administrative provision. So ano na lang ni class, basahon na lang class kasi maano ako. Are important, when to file. Shall be filed within 1 year after the death of the descendant. Estate tax return must be filed within 1 year after the death of the descendant. and may be extended for 30 days. Okay, so you have here some statements. In case the available cash of the estate is insufficient to pay the total estate tax due, payment by installment shall be allowed within 2 years from the statutory date for its payment without civil penalty and interest. So, kung lakwarta, pwede mabayaran into installment within 2 years from the statutory date. If napatay siya January 1, 2020, so estate tax must be filed until January 1, 2021, no, kati 1 year mo. And there is an extension of 30 days. So from January 1, 2021, no, that's after 1 year sang pagkamatay. So you have 2 years, no, to settle, no, or to pay in installment. So if a bank has knowledge of the death of a person who maintained a bank account alone or jointly with another, it shall allow any withdrawal from the said deposit account subject to a final withholding tax of 6%. So if the depositor, no, sa bangko is na deads, so in may knowledge si bangko nga siya na deads, ang ma-allow sila withdrawal sang kwarta from the bank, and but it will be subjected to 6% withholding tax. Okay? So requirements: when the gross estate exceeds exceeds 5 million, so the tax return shall be accompanied by the statement which is certified by the independent certified public accountant. No? Stating the itemized assets of the descendant with its corresponding gross value at the time of his death, or in the case of non-resident non-citizen of the Philippines, that part of his gross estate situated in the Philippines, itemized deductions from the gross estate in the amount of tax due, whether paid or still due, and outstanding, meaning permado ni CPA, no, if the gross estate exceeds 5 million. So where to file for the resident citizen? It's in the AAB, no, RDO, or the collection officer, where the descendant was domiciled at the time of his death. No, hindi siya nag-start. If non-resident citizen, you have here, he has a registered executor administrator. Sa RDO, sa executor administrator. Kung hindi registered, sa RDO, having the jurisdiction of the executor or administrator's residence. No, if wala gid no executor administrator, sa office na gid the commissioner. Okay, so okay, class A, just read the remaining. It's not that hard man to understand. So that ends our estate tax. I have already given you the activity that you have to pass on the second distribution of module, and all I ask is to practice, no, solving estate tax questions, or in your reviewers, no, to practice lang what I have discussed. Okay, so thank you and have a nice day ahead.